Hey everyone, my name's Andy. My channel is Finding Value. If you like this content, please subscribe, click the thumbs up button, leave some comments below. I want to go over, we've got the impact of pandemic on residential real estate and economic outlook. I'm just going to dive right in. We're going to go through a bunch of slides, and I just want to show you that a lot of these slides align exactly with what I've presented already, which I thought is kind of cool. So this is a National Association of Realtors. Go down, it says Biden presidency. There might be a homebuyer tax credit, $15,000 at closing. I didn't even know that. All this stuff, looser monetary policy, bigger fiscal policy, extend mortgage forbearance, temporary lockdown to contain the virus. So here, off the chart collapse and then off the chart recovery. You can see the big moves here in GDP growth. Going down, GDP still short of prior peak. We've got GDP declines in other countries. GDP is lower, but income boosted from the stimulus checks. Savings rates still elevated, ready to pump up the economy after vaccine. So savings rates are up, that's good. Jobs recovery still needs another 10 million jobs to get us back to the prior peak. We've got job gains losing momentum a little bit. All states with fewer jobs, pretty crazy there. Let's keep going down. Consumer price inflation at only 1.2%. This is what the breakdown they have. Remarkable housing market. So existing home sales. Look at that. Whew. It's a slingshot higher. New home sales. They're pumping up higher. Pending contract breaking out higher. Mortgage applications to buy a home. They're far higher. 30-year mortgage rates are going down. They're lower. Percent of income for mortgage payment, it's pretty steady now. And look at this is important though. This is the percent of income for mortgage payment, and it's not that high. I mean, that's 15-16%. That's not too bad. Home price appreciation, way higher. Housing asset, yeah. Cumulative equity gain from purchase. This one's kind of a cool thing here. So if people purchase in 2010, 2011, 2012, this is their equity that they've gained in their house. It's over $100,000 from 2010 to 2012. Everything's over 40 grand from 2017 all the way to 2013. And it's still quite positive in 2018 and 2019. And this is where I get confused with all these people who think the housing market is just going to implode or crash and people are just going to foreclose on their house. If they foreclose, they're going to lose all this equity. There's no way that they're going to foreclose. They just sell it. Maybe there's some stuff in the forbearance program if you're in that you can't sell it or something. I don't know. But if you have trouble paying it and you're not in the forbearance program, you just sell the house. And remember, days on the market, we'll go over some of that, is nothing. So if you get in a crunch, you could sell it very quickly. Home ownership rate, looks like it's coming higher. Here, months supply of existing home inventory. Look at that. That is so low. A little over I think it's 2.7 months to be exact. Way lower. Months supply of newly constructed homes. Way down of supply for newly constructed homes. And look at this. He even draws in the red line like I have at about 1.5 million. And he's like, housing starts need a huge ramp up. Yeah, they do. We're way short on new homes. Go down, look at price of softwood lumber, boom, skyrocketing. Job losses occurring in low-wage industries, weekly earnings. Office occupancy falls, look at this is ridiculous. Millions, net absorption of office space, way down. Half of office using workers still working from home. Percent of workers who teleworked, look at all that, it's insane. Office occupancy losers and gainers. Gainers on the right. Bunch of losers on the left. Let's go down. California's to where? So a lot of Californians are moving to Texas, Nevada. Colorado, that's where I'm at. We don't want Californians though. Rental vacancy rates coming down. Comments about paying rent, troubling according to census. Pretty low in Colorado, but it looks like Louisiana, Mississippi, Florida, Pennsylvania, Iowa, pretty rough there. Have no to little confidence they can pay rent Rent will be deferred. So actually paying rent is pretty high though, over 90%. Real estate investors' market share of home sales stepping back. Economic forecast. Looks like the forecast is next year GDP growth of 4%. That's going to be insane. We're seeing economic recovery to the copper to gold ratio, platinum to gold ratio, silver to gold ratio. All that stuff is saying we're having GDP growth, that jobs are they're coming back. They're projecting a 10-year treasury coming back a little bit and consumer price inflation going higher. So that's something. Mortgage rates, housing market forecast, looks like it's going up a little bit for mortgage rates. New home sales are definitely going up. Existing home sales are going up, and home prices are going up. I think it's going to be stronger than 3%, but that's me. So I just want to go over this. You know, there's a lot of, I should say, similarities between what I've presented in a lot of my videos and with this report. Obviously, we need to build a lot more homes than what we have in terms of housing starts. They're signaling that house prices are going to go higher. I think that house prices are going to go higher. I think the economy is growing. We can see that in all our ratios. We can see it in all the metrics. I think inflation's coming. They think inflation's coming. This is just more information and more data from a different viewpoint, I should say. Basically aligning with what I've already presented and giving evidence and more support to the thesis that we hold on this channel. So if you like this type of content, guys, please click the thumbs up. Please subscribe. And this is Finding Value. Thanks for listening.